How OTC Markets is transforming its image and attracting entrepreneurs like Paul Elio. Time was the pink sheets, those pink printed pages for penny stocks, were a well-known sign of trouble. Rife with fraud and promoted by boiler rooms. No one knows this better than Cromwell Coulson, chief executive of the OTC Markets, who acquired the pink sheets from Commerce Clearinghouse almost 2 decades ago with a group of value investors and has been transforming the over-the-counter markets ever since. Today, OTC Markets Group, itself public traded on its own marketplace, comprises 3 different markets. OTCQX is its best market for operating companies. OTCQB is a venture market for startups and entrepreneurs that meet certain disclosure rules. And Pink, the electronic reinvention of the pink sheets, is for, well, everything else. While many of the nearly 10,000 companies listed between the 3 markets are still highly risky for investors, for entrepreneurs these markets, which, unlike the NYSE and NASDAQ, are not stock exchanges, provide an interesting alternative to venture capital and other private sources of financing. What we've spent 19 years doing, says Coulson, is bringing investors online. Quote, I spoke with Coulson in late February at OTC Markets New York headquarters not long after Elio Motors, the innovative 3-wheeled car company, listed its shares on OTCQX, becoming the first equity crowdfunded IPO and, briefly, surpassing a $1 billion valuation. That high-profile listing raised the prospect of other startups following suit after doing mini IPOs now permitted by the new securities regulations. Elio Motors founder Paul Elio said then that he chose OTC Markets over NASDAQ because it was less costly and required less cumbersome compliance paperwork. As more companies that are now raising funds through equity crowdfunding look to list their shares, next year will get busier. Coulson says, in 3 to 5 years, it will be explosive. It totally changes the world. Quote, Paul Elio, Chief Executive Officer of Elio Motors, chose to list shares of his innovative car startup on OTCQX over NASDAQ. OTC Markets CEO Cromwell Coulson hopes other equity crowdfunded companies will follow suit over the next few years. Coulson isn't the only one thinking about how to get more capital to smaller companies. As I wrote about last month, Canada's junior stock exchange, the TSX Venture Exchange, part of TMX Group, the parent of the Toronto Stock Exchange, has been marketing itself to American companies, particularly those in Silicon Valley, in an effort to expand beyond its mining company history. And earlier this month, a bill known as the Main Street Growth Act, which would enable the creation of venture exchanges for early-stage growth companies, passed the House Financial Services Committee. OTC Markets opposes the bill's mandate of a single centralized exchange for the listing and trading of all venture securities, and instead supports an amendment by Representative Maxine Waters Dem. Califf, to study how to structure secondary trading markets for venture securities. To understand what Coulson has done with the OTC markets, go back 2 decades. His history with the pink sheets dates to his time as a trader at Car Securities, making bets on the thinly traded stocks listed there. I called up Michael Bloomberg and said, "You should buy the pink sheets and put it on your terminal." He said, "That's the dumbest thing I've ever heard." Coulson recalls. So Coulson organized a group of value investors and bought the pink sheets himself from Commerce Clearinghouse in 1997. The question was, how do you take it electronic and eliminate the inefficiencies? He says, we did that. And we added electronic trading. Pricing got better. As I went along, I asked sophisticated investors what to do. What I realized was that we needed disclosure. Quote, Without disclosure, not to mention cold calling brokers hawking the latest scam, the pink sheets had been the Wild West of Wall Street, where penny stock promoters like Robert Brennan and Jordan Belfort, the real wolf of Wall Street, thrived. But Colson argues that smart value players were also making fortunes on some of these thinly traded stocks. He figured that as Nasdaq marketed itself to larger companies, smaller companies and startups would need to go somewhere else to raise capital, and that the key was to use technology to increase disclosures to investors rather than cut off liquidity. When Nasdaq became a stock exchange in 2006, they really lost what small companies needed. Colson says, especially for small companies, whose shares trade irregularly, as do many of the smallest of small-cap stocks. You need a market maker. You need someone who can provide that liquidity, he says. For entrepreneurs, the OTCQB venture marketplace has the advantage of very basic criteria. American companies that want to list must be current in their financial disclosures but do not need to meet any financial standards, have a minimum bid price of a penny a share, and provide verification of officers, directors, controlling shareholders and the number of shares outstanding. It's a market for companies that venture capitalists want nothing to do with, he says. As the market's ranks swelled, by the end of 2014, the OTCQB's 2,252 companies represented nearly one quarter of those on the three markets. Last year, OTC Markets went through those listing and culled more than 1,000 that didn't meet new stricter criteria, pushing them down to pink. If you're not willing to meet the standards, investors should know, he says. At the same time, he increased the requirements for companies that wanted to list on OTCQX. But Colson worries more about disclosures than about the risks of companies failing or investors losing money. If there is disclosure, who cares? He says. If companies don't fail, we're not giving enough chances. This is not the AAA debt market. This is not the S&P 500. It should be a market with risk. That's how you give entrepreneurs a shot.